Good morning and thanks for listening to the Industria REIT Results Snapshot. My name is Alex Abell and I'm Industria's Fund Manager. Industria REIT is a property trust that owns a high quality portfolio of industrial and office assets around Australia. It has a modest level of debt and is focused on providing investors with a high, sustainable and growing level of income. The first half of financial year 2018 was another positive result for Industria as we continued to build on our reputation of delivering for investors. We reported funds from operations, our cash earnings measure, of 14.8 million, which was up 0.6 million on the prior period, and on a per security basis 9.1 cents, 0.7 of a cent lower than the prior period, largely due to a profit skew anticipated in the second half of this financial year that aligns with our reaffirmed guidance of 18.4 to 18.6 cents per security, or 2 to 3% growth on FY17. One of the most pleasing aspects of our performance from my perspective is the continued success we are having on the leasing front. We completed 10,400 square metres of leasing, including renewing 83% of our tenants at Brisbane Technology Park. Our active management approach that involves engaging frequently with our clients and helping them to achieve their business objectives continues to yield results that underpins our 95% occupancy rate and the weighted average lease term across the portfolio of 7.3 years. The leasing is also an ongoing endorsement of the quality of Industria's real estate, which is essential to tenants seeking affordable and well-located property. Another highlight from the period was our demonstrated ability to innovate and execute rapidly. After observing the cost curve for solar PV fall into our favour, we scoped a major solar installation across our assets at Brisbane Technology Park. We designed and tendered the project and installed 700 kilowatts by the end of 2017, completing this journey in less than 8 months. That investment improves the performance of our assets, generates a return on cost exceeding 15%, which is an income stream that is capitalised, creating value at the asset level. The installation also reduces the volatility of energy costs being passed onto our tenants by generating 40% of energy from renewables, improving the environmental and operational credentials of our buildings, and creating a point of difference in the market. We won't always be able to innovate and deliver projects as compelling as this, but you've got my assurance that we'll continue to seek out innovations that enhance the long-term performance of the fund, and that we won't be caught up in bureaucracy that can stymie ideas and the ability to execute. Moving on to the balance sheet, it remains well positioned, with 32% gearing, the bottom of the target range of 30 to 40%, providing capacity to execute on future growth opportunities which have the potential to increase fund earnings. The net result of the outcomes from the half is that we have excellent income visibility, with only 5% of lease revenue expiring in the next 18 months. That underpins our 2 to 3% growth on FY17 of 18.4 to 18.6 cents, and the sustainability of future earnings. Distributions per security are forecast at 16.5 cents, which based on IDR's closing price on the 16th of February, provides a cash distribution yield of 6.7%, with distributions paid quarterly. If you would like more information, please feel free to give me a call. Our ASX code is IDR and we are part of the APN Property Group. More information is available at www.industriareit.com.au, where you will also find my contact details. Thank you for listening, and I look forward to an opportunity to meet with you shortly.